Welcome back all to Tech Tune-Up. I'm your host, Paul Meeks, brought to you by my friends in Detroit, Michigan at Benzinga. Remember Benzinga Pro Tools. Before we get too far, you can see I'm using a new background. And if you can squint a little bit, it says Freedom Capital Markets Investment Bank in New York. I'm their fairly new head of technology research. No surprise, but I will be publishing, as analysts do at investment banks, on all these things that we've been talking about, beginning in a couple of months. I have to go through some regulatory startup hurdles first. So today, September 23, 2025, we're back after a couple-week hiatus, but let's get into the stock news, what it means specifically to these companies and what it may mean more broadly. So let's start with Nvidia. Nvidia seems to be on a spending spree, and it has me not really worried, but somewhat worried. They are investing in Intel, and you may recall from my previous comments on this segment that I think Intel is a bag of shit, and no matter how much money Nvidia kicks in, OpenAI may kick in, other tech companies may kick in here and abroad, and even the US government. The problem is money is not going to be able to heal the wounds over at Intel. They are so far behind with their manufacturing process that I just think it's wasted money. So that's $5 billion. Nvidia investing in Intel, not because they want to, but because Trump forced them to. Now, more significant is the mammoth deal, might be the biggest of all time, where Nvidia and OpenAI are in a partnership over the years to spend $100 billion on building AI data centers. Now, the key here is when you spend all that money, will you at the end of the day earn an adequate return on investment? Of course, Nvidia is not going to get in this game unless we know for a fact that all these data centers will be populated with their chips and their data networking gear. A lot of people don't know about Nvidia that part of the magic is not just the speed of their GPUs, but their networking gear and the fact that they have a total solution where everything links together. So we'll see. I think Nvidia is getting to the place where they're just spending so much money to bail everybody out. Hopefully they're a little bit more deliberate going forward with their capital expenditures. I must say, I worry a little bit more about OpenAI. Here's a privately held company valued at $500 billion. If you were to pop it into the S&P 500 today, it would be among America's top 20 companies by market capitalization. Now, these guys, because they're in a nuclear arms race, they are spending so much money. And I don't think that they're going to make money for years. And at the end of the day, maybe getting this lead will be great long term. But I worry that maybe OpenAI is getting out over its skis. Nvidia, you don't have to worry about. Nvidia is a semiconductor company, but it generates cash and has a profit margin of a software company. Don't worry about them. But OpenAI does not have the funds, and they're going to burn cash for years. And every day they're spending more. So I worry a little bit about that. Oracle has also been in the news for a couple reasons. First, new leadership there. So Safra Catz, who once was the co-CEO with the founder Larry Ellison, then she became sole CEO. Now she's stepping down, and don't feel badly for her because she's a billionaire, and they're being replaced by two insiders. Now this is significant for Oracle because Oracle, as you know, has made a bunch of announcements, and they have a lot of traction, and they have a very bright long-term forecast. And also we know, even though it hasn't been formally announced yet, that they will lead the consortium that is going to take control of the US operations of TikTok. So these two people that replace her as co-CEOs, I think are well suited because they manage the biggest businesses today within Oracle. So it's an internal hire. So it goes to tell you that all these magical announcements, all the PR over at Oracle is past us. Now they have to execute. And it looks like they're bringing in 2 operationally focused people that can do that. But let me tell you this, I've covered Oracle since the 1980s. And even though Larry Ellison is now elder statesman, and I think they call him chief technology officer, he still controls that company. And whether it's Safra Catz or these 2 guys that have just ascended to the co-CEO role, they're all his bitches. He runs that company, and he will until death. The other thing I think is interesting is, let's take a look at Alphabet. Now, Alphabet got a big pop in its stock recently, and I think the stock might be ahead of itself, even though I like the company and it has been on my buy list. But remember, they were, let's call it, acquitted from charges about what was going to be the remediation, because they were found guilty of abusing their monopoly in search. So anyway, that's past us. They did not have to cut off YouTube or the Chrome browser or any such thing. So that was actually a really nice, positive, favorable conclusion in the courts to one of the things that ailed Alphabet. But now we are in the end of the game of the other suit brought by the Department of Justice, and this one is monopoly accusations in digital advertising. So we got past the browser and the search. Now we're into digital advertising, and this time the courts may find against, and if they do, they actually may not have the same positive outcome this time round. They skated through with the search monopoly. Now they're facing a very difficult position with accusations over their digital advertising monopoly. And I don't think this one's going to go so well. So anyway, all that being said, I think Alphabet shares are probably ahead of themselves. I am super pumped about AppLovin. You guys know AppLovin, even though the street hated it, has been my top pick, not recently, but for quite a while, maybe a little bit less than a year now. And so AppLovin is now trading at $663 a share. Here's what you do. I think, and again, I'm going contrarian, right? Because when the stock starts to move, I'm in early. I'm usually out early. I think you should at least begin to trim the position. Don't sell all of it, but trim the position here above 650. And when I say here above 650, the last time I looked a few minutes ago, trading at 663. So take the win. It was an enormous win. The stock is up 50% in 1 month. But I think the fact that it was included in the S&P 500 last Friday, that was a driver now in the rear view. And also they've announced some product enhancements that are coming on October 1st. But the fact that they've already announced it, does it really matter what happens on October 1st? It's already baked into stock. So I think this one, take your money and run, and maybe run. Here's a situation where 650, I think, is a little extended. Now we're at 663. Citi is kind of interesting because I'm always looking for AI use cases, and Citi is going to initiate a test with 5,000 employees on using AI agents for a financial services company, and not just any financial services company, one of the biggest money center banks on the planet. Stay tuned, because this could be a real mover and shaker if it's proven successful. Everybody has heard that Trump wants to charge $100,000 for an H-1B visa. If you don't know what an H-1B visa is, tech companies sometimes try to secure these visas for foreign employees that they bring in because they don't have the homegrown US talent to move forward with their technology. We need these guys because we don't graduate from our colleges in the United States enough science and math folks. And so, okay, you hold these people for ransom, and the companies that want to hire them, the US Treasury takes in $100,000 per visa. I think these visas will drop off. And what happens? The best tech talent around the world that we desperately need will stay away. And we desperately need them. So this is, I don't think, a good thing. I think it's a bad thing. And just in case you're keeping score, about 70% of these visas over the last few years have come from hiring employees out of India. So this is a real slap on the face to India, and maybe part of the negotiations between our country and theirs. This is interesting. Boeing, even though it's not a pure tech stock, I like to talk about it. It's been on my buy list in the past. Boeing, according to the US ambassador in China, is going to get a huge order from the Chinese for our aircraft. It probably won't be announced until we have this, what I call big, beautiful trade deal, hopefully between the US and the Chinese, that also includes what happens with TikTok. But I think it's coming from a pretty good source. US ambassador to China, very good for Boeing. Boeing has had a very nice turnaround under their turnaround CEO, who's only been there about a year or two. This is interesting. OpenAI, we've talked about this before. Part of OpenAI's really aggressive spending that has started to worry me a bit. They have an assault on Apple. I think OpenAI and Meta at some point will get together on their AI glasses initiative. Because right now, OpenAI wants to have these devices, and we know that they're glasses. Meta is doing the same thing. Both the companies are powerhouses. Either they're going to collide as they develop these AI glasses, or they're going to collaborate and become teammates. I actually think the latter is going to happen. So next on the list, your buddy Elon Musk. You guys know I love talking about him. He just raised $200 billion valuation for XAI. So right now, the highest valued private company is OpenAI at a $500 billion valuation. XAI doesn't even have a sliver of the game, and they're getting a $200 billion valuation. Now, you couldn't invest in it anyway. It's private, not public, but it goes to show you that the market's getting frothy if a private company that is not so well developed, such as XAI, even with the influence of Musk, and some people think he's a genius, is getting a $200 billion valuation in Silicon Valley. Intel, I think Intel, no surprise, might be a short. Intel's now trading at about 30 bucks. Are you kidding me? This company is a dumpster fire. Now, it got money from the feds. It also got money from Nvidia. But it doesn't matter how much money you throw at this company. They don't have the manufacturing technology. And I don't think Nvidia is going to be able to help them that much. They're not a semiconductor capital equipment company. They just supply the GPUs. So anyway, I'm thinking about shorting Intel. So I'll keep you in touch on that. Tesla, Tesla, I just actually got back from a lunch earlier this week. And the keynote speaker at this lunch was the head of research for ARK Invest, which is Kathy Wood's investment company. And she is a celebrated Tesla enthusiast. And that company has a huge stake in Tesla. Their very popular ARK Innovation Exchange Traded Fund has a 13% stake in the company. And here's where I think they get it wrong. They agree that the EV business is in steep decline. I mean, it is in real trouble. And so they're subscribing all the valuation of Tesla shares to the fact that they're going to be the king of autonomous driving. We know that they have a test going on in Austin, Texas. But right now, Waymo, which is funded by the very deep pockets over at Alphabet, is way ahead, not only in Austin, but in other cities with their tests. And I will tell you this, under the radar, you know who's creeping in this space in electric vehicles? It's Amazon with Zoox, Z-O-O-X. And you guys know from following Amazon over the years like me, there is no more aggressive organization on the planet Earth. These guys are ruthless. They're not only ruthless, they have deep pockets. And so over at ARK Invest, They say that at the end of the day, Tesla is going to have more than a 50% share of the autonomous driving market. I think not. I think there'll be lots of players, and I don't even know if they'll be in the number 2 or even 3 position after Alphabet and Amazon. So anyway, I thought I'd pass that on because that was their investment thesis. Over 50% market share over time in autonomous vehicles. Robinhood continues to amaze these guys. Years ago, I thought they were just a crappy speculative meme stock. I got to give these guys credit. They are innovative. So now sometimes they do stuff and then they ask questions later. But, you know, now they're offering a social media app for investors, wildly popular. And now you can essentially take prop bets, right? So you can do sports betting on the app. And even though the sports betting was only announced a few weeks ago, I understand that right now it is already just a couple weeks into the intro, a $200 million a year forecasted business. So Robinhood has been on my list for a while. It's been a home run stock for you guys. I'm sticking with it. Microsoft is up next. You know, Microsoft, I'm starting to get a little bit worried about the valuation. I've told you this before. We'll see what happens. Next is CoreWeave. CoreWeave is, you know, a stock that we got into. We started talking about it when it was private. Now it went public last March. The same thing goes with AppLovin. It is on a move right now, a flagpole spike, because as you may recall, they're part of this AI infrastructure building trade. They essentially build data centers and rent the capacity out. We call that a neo cloud. But anyway, this stock was trading earlier today, high 130s. If this stock gets back to about 150, which is where it peaked in the early part of August, I would also start to trim CoreWeave. So again, specific instructions. AppLovin, I look to at least trim it at 650 and above, and it's there now. CoreWeave, we're a little bit below, but if that stock gets back to about the 150 handle, I think you should maybe take out your principal and then let the rest of the money ride. But starts to get a little squirrely valuation-wise. So with all that being said, let's go on to some of my tech picks. So here you guys, you know, I'm pointing out just changes. I told you about AppLovin. Take a look at some of these stocks that have moved for either price too expensive, or I'm waiting for a fundamental catalyst, to the yellow holding pen. Taiwan Semi, Nvidia, believe it or not, Snowflake, Cadence Design, Microsoft. I told you I'm a little bit antsy. Netflix, I think, is going to be huge, but right now it's facing a lot of bad PR about the potential of Paramount and Warner Brothers Discovery merging. CoreWeave, I told you, let's trim it at 150. A couple of ideas have come on my screen. One is Applied Digital, and actually a couple of folks over the last year or so in our Q&A period have asked me about that stock. I hear you. I'm also looking at it pretty carefully, but for Paul Meeks right now, it's in evaluation mode, as is Corning. I am intrigued about this venture that Corning will have on the glasses for the iPhone with Apple. Now, Apple is being forced to bring manufacturing back to the States. They don't have a choice. They prefer to have that awesome supply chain in China, but Trump is forcing the States. But this deal that they have for the glass on the iPhone with Corning could be interesting. So I've been looking at GLW, a company that I've also covered for decades. So anyway, just pointing out some of the major changes. You know, the big news today is my guidance to begin to trim AppLovin and CoreWeave. So let's finish up with some of the tech trends. You guys, it finally happened, right? After waiting, the Federal Reserve Board finally did lower rates at its last meeting. And if you take a look at the CME FedWatch tool, there is an 80% probability, according to people that watch this and actually bet on this outcome, that at the next two meetings, there's only going to be two meetings left, October and December. At the next two meetings, the Fed should be lowering rates 25 basis points per meeting. So including last week's cut, we'll have 75 basis points benchmark rate reduction by the Fed before the end of the year. So we'll see what 2026 brings. One of the things I will tell you that has surprised me is all the results are in, obviously, for all the companies in the S&P 500 who reported their quarters ended June 30th. After all that information has been tabulated, going into what we call that quarterly earnings season, analysts were expecting on an aggregate that the S&P 500's EPS, earnings per share, would grow about 4% in that quarter versus the same quarter a year ago. The numbers came in and ended up being about 12% or about 3x. So despite the geopolitical madness and some of these things, as we know, because there is no China-US trade deal yet, some of these things that could be problems are yet to be resolved. But man, I must tell you that regardless of what other macro information says, earnings for US corporate America have not only been robust, they've been very resilient and better than expected. I think a couple of interesting things are going on with AI because Anthropic and Perplexity AI have been sued and are looking to defend themselves against author over their copyrighted works. So these, let's call it search via AI, large language models, they essentially have been, according to these authors, pirating works to build their models. Now, Anthropic, which is a privately held company, is taking it very seriously because they're already into it in a class action suit settlement for over $1 billion. And this is kind of funny. Remember the old days when if you're old as me, when people used to go door to door and they would sell the Encyclopedia Britannica? Believe it or not, that still exists, at least in digital form. And those folks are suing Perplexity AI over their intellectual property. So it remains to be seen how this is going to work, analog and digital, and protecting your intellectual property. I bet it does not get solved until it goes to the highest court in the land, the US Supreme Court. But in the meantime, lots of puts and takes. Going to be super interesting what happens. And I guess the last thing I should say before we get to Q&A is I think that we're going to have a US-China trade deal pretty soon. Why do I say that? Because we have the US ambassador to China saying we're about ready to have big aircraft orders for Boeing. And that's got to be part of the package. We've essentially, the US government is pre-announced what's going to happen with TikTok. Oracle is going to take the lead of the US consortium that's going to control TikTok US. So if these aspects of the deal are starting to come out, I imagine that the whole enchilada will be announced pretty soon. So that's my feeling. But on the other hand, just in the last 24 hours, President Trump was supposed to meet with Chinese Premier Xi Jinping soon, before the end of 25. And now both sides have announced that if they meet at all, it's going to be pretty deep into 2026, not even at the beginning of 2026. So if the face-to-face between those two gentlemen is pushed back, that's a negative. But all the chatter about all of the pieces of the deal that seem to be coming together, positive. So we'll see. I'm a little bit confused. And why do I talk so much about this? I am most interested in one thing as a tech investor, and particularly a semiconductor investor. Will Nvidia and AMD be able to sell their GPUs to China? I actually care about that much more than I even do the tariff rate. So we'll see what happens. Stay tuned. I'll be talking about this every Tuesday morning, Eastern time. So let's finish up with some questions if you have any. Paul, which sectors do you consider overbought and oversold? I would tell you first, oversold value stocks continue to underperform. Everybody thought that they're going to have their day in the sun. So they're definitely oversold, but I don't see a catalyst that gets them to turn. Overbought is my favorite sector, technology and communication services. I will be honest with you. The stocks probably have run too far, too fast, particularly the bounce that they've had. Tech had a bear market, down 19%, bear market defined as 20%, back after April 2nd, Liberation Day. Liberation Day, the only thing it did is liberated investors from their money. But since that trough at the end of the month of April, these stocks have exploded. Some of them are up multifold. So I think my sector, which includes technology and communication services, is overbought. That's one of the reasons why I'm saying let's trim some CoreWeave and some AppLovin. I think the small cap value stocks, maybe some of these industrials are oversold, but never go to me for one of those picks. Sometimes I know things about Boeing and a few others, but I'm not your guy on really that much beyond tech. I stay in my lane. But thanks for the question. Thoughts on Micron? I like Micron. I've owned it over time. I've made money on it. I haven't owned it during this swing, which kind of pisses me off because that's one of the companies I know particularly well. I've been covering that one since the 80s too. They're going to be reporting. I think that they will at least meet or beat. I think they'll give pretty rosy guidance. For a long time, Micron was a tale of two cities. Everybody knew that their high bandwidth memory business for AI applications was going great, but unfortunately, they were diluted by the shitty legacy business where they sell chips that go into PCs and cell phones, where there was inventory correction going on. So now the AI portion of the business is large enough and fast growing enough that it is overwhelming the legacy negative part of the business. So Micron, I would not buy it ahead of the report because it's already come too far too fast. But even a couple of years ago, I think on this program, I said it was a $200 stock. Looks like that's going to happen. I kind of wish that I stayed with it from when I said that all the way till now. But I've made money on it, but I've been in and out, in and out. And unfortunately, shame on me. I'm not in it now. But please don't buy it ahead of the quarter because even if they have a good report, the stock might drop a little bit just because expectations are too high. Paul, can you take a look at Big Blue? Yeah, I actually know quite a bit about IBM. I'm a little bit worried about the valuation, but yeah, IBM is a company I respect. Their new CEO, not particularly new, a couple of years now, I think has done a nice job of rationalizing the costs of that company and also really benefiting with their consulting business from the AI driver. And of course, everybody knows part of the recent move in IBM is based on the hope that they will really be a leader in quantum computing. And I have no reason to think that they won't be. They said that they're going to have a commercially available system by 2029. Obviously, the stock will move well before that and already has. But I actually think that IBM is in a pretty good position. They're always going to be cutting some heads. That's part of getting rid of costs in some areas, legacy areas that were no growth, low profitability, and refocusing the business on AI and particularly quantum. So if I'm a tech CEO, I have to take a look at AI agents too. And you know what? It might cost a lot of people in my organization their jobs, but you have to move with the trend. So I think IBM's okay, just a little bit expensive. All right, guys, that's all the time we have today. As always, appreciate your attention. We talked about a couple of big winners today, but now I'm saying as a contrarian, at least begin to trim your stakes. So I will be following all this, including Micron's quarterly earnings tonight, and I will see you next week.